Good morning. Welcome to the 12th installment of the Genghis Capital Investment webinar. My name is Daniel Ogeto, and I am in the Marketing and Communications Department. I'll be your moderator for this session, and maybe I can give a brief of the Genghis Weekly Investor Briefing, a webinar that basically explores where the opportunities are in the financial markets and goes through the key insights of the previous week. And today we are glad to have our guest, who is Mathew Kabeere, and Gerald Morioki, who is our in-house research analyst. So Gerald will be taking us through the fixed income and the equities section, and then Mathew will take us through the global markets. Over to you, Gerald.
Thank you, Daniel, and good morning all. Let me share my screen. So we'll begin with the recap of last week, what happened in the equities market. We're still seeing some bearish sentiment clouding the market over the recent weeks. This is not unique to just last week. So last week, NASI was down about 0.8%, and the 20 index was also about almost a similar margin of about 0.9%. So still some weakness in the market. I think this reflects what is happening locally and also globally. Is we are getting back to that level where uncertainty was a major part of how market was performing, especially when the pandemic struck in early March and a part of April. So turnover rose about 27.3% to about 1.7 billion. Although this is still quite low compared to where historical averages have been. So there's still that cautiousness from investors about taking on risk or making investments across the risk assets. So top gainers, Standard Group, Captura, Everready, and Nation Media. Top losers, Express, Samia, TPS, Uchumi. So you'll find that for the top gainers and top losers, the top gainers of last week, some of the top gainers of last week were the top losers of the prior week. And some of the top losers of last week, for example, Uchumi and Filmtree, were the top gainers of the prior week. So this as I mentioned in last week's session, is definitely reflects where most retail activity and where volatility in terms of price tends to be in the market. You'll find this the small stocks, the stocks that trade below the 10 shilling level, tend to be mostly in the top gainers or top losers, at least on a weekly basis. So foreign activity participation 60.1%, quite some participation from the local end. I think we are coming from foreign participation of 70% in the prior week. So local investors came in the market last week, taking about 40% of the entire market activities. This is quite good. I think for the most of the weeks that we have been talking about, participation from the foreign end has been about over 70%. So still selling out of the market for most of the counters. The prior week, I think we had a small inflow, mostly from Safaricom, about 10 billion. But overall, when you look at in aggregate the entire market, we're still seeing foreigners exit the local equities. So bullish sentiment still on Safaricom has been observed over the recent weeks. Top traded were the usual Safaricom, KCB, BL. So maybe to add on the foreign activity end, we saw a lot of some profit taking from the banking sector. I think this is a pattern that we observed, especially as at half year, just before the half year results announcement. And we saw a lot of activity as most investors tried to interpret and also anticipate what the sector is generally expected to perform. So we are seeing a similar pattern as we will highlight in terms of when we go to our recommendation segment. So in terms of where we are trading at compared to some African peers. Basically, the SSA market PE is about 9.6 times and a div yield of 5.3%, which is quite good compared to historical average for the Kenyan market generally. However, in terms of African average, we're still we could say we're still fairly within the African average multiples. But if you notice that Mauritius, which has been skewing the African average, we removed it because last week they gave a PE of about 100 times, which was not making sense for us. So for now, we are still monitoring Mauritius and how the averages are going. Then we can decide later on whether to include it in the subsequent reviews of African averages. So we're still within the African peer average in terms of market prices and also in terms of the dividend yield. So ideas for the week. For this week, last week we released our valuation report and the earnings expectations for Safaricom. We valued the business at about 31.34, and they recommended a hold. I think the price then was about 30.50, so a very marginal, about 3% upside. So we are recommending a hold based on the earnings expectations for the business this year. So they expect to announce their results during the half-year results in 9th. So definitely we don't expect the performance to be solid. I think we are looking at about 14% decline in M-Pesa revenue, a very stable earnings, very stable revenue from voice segment, which has basically not been performing. Then some uptick in SMS revenue. I think from the recent data from the Communications Authority, there was some uptick of SMS communication. And then the data segment definitely going to perform solidly in the half-year results. So as I mentioned earlier about the pressure on banking stocks, so this is a pattern that we observed in the half-year results. I think there was a lot of uncertainty in terms of how banks are going to treat their provision levels and what the impact is. And we are seeing, and at that point, I think most of the banks, especially the big banks, KCB, Equity, they fell to their 52-week low levels. I think KCB was about 30, and then Equity Bank was about 28, thereabout. So there was a lot of selling pressure just before the earnings release, and this is a pattern that we are seeing starting to pick up. So the sector is generally expected to start announcing this month, from this week actually. So so we see this as an opportunity, for investors out there to start accumulating on the banks as the prices come down. I think based on their fundamental value that we did some time back, I think the upside is still quite good, especially if they announce better than expected results. So so unless there are surprises in terms of earnings, both on the upside or the downside, I think those prices are quite good for investors to look at. Corporate calendar. I think 9th, of course, for Kenyan dividend disclosure, and then earnings released half year 21 on 9th on November also for Safaricom. I think I've talked about what we expect in terms of the performance for Safaricom. So from the macro side, some data came in October statistics. Headline inflation of about 4.8%. Core inflation about 2.2 tends to be fairly stable. I think the key inflation mover for October was the food inflation, which was about 11.4%, and also the food rose about 5.8%. So, however, overall, in terms of inflation, still within the CBK target band of about 2.5 to 7.5% for this year. Again, current account deficit So this is an estimate from CBK. I think third quarter they've given some third quarter estimate of about negative 5.0%, and this is mainly from the import side. I think due to the environment how is it has been, it hasn't been much in terms of import export, and this is definitely filtering into the current account statistics. So for macro calendar outlook, PMI Purchasing Managers Index, for those who follow the PMI index, tends to be a pulse of the private sector. A reading of above 40 means expansionary activity in the sector, and a reading below the 50 level usually shows contraction in the private sector activity. So this is expected to be released on 4th November. They stay about two days away. Fixed income markets, secondary activity bonds. So this was a slight decline of about 9% to 12.1 billion in terms of turnover. And then they trade majorly on the IFBs, which tends to be the most liquid bonds you could find in the bond market. So T-bills performance was about 72.1%. This is basically the primary at Kenya shillings 17.3 billion. So this is the second consecutive week of weekly decline in terms of performance. And then yields have increased about 0.54% since the recent flows during mid-July, and about 0.28 during the quarter. So there's still some wait and see approach by investors, anticipating that there's going to be some uptick in the yield. So liquidity trends, interbank was 0.4% week on week, about 3.02. Then the central bank was there to support the market in terms of mop-up activities. The total sort of about 46 billion in terms of OMO. They received about 14.8, but accepted about 12.8 billion shillings. So net domestic borrowing at about 233 billion, and if you include the CBK overdraft, these are short-term loans that Russia usually receives from the central bank. It comes to about 238, so about 5 billion in terms of OD from the central bank. So domestic borrowing is about 38.9, the revised target of about 600 billion shillings for the fiscal year. So for fixed income trade, we're recommending the IFB. The IFB is infrastructure bonds. It's usually tax-free and usually very liquid. And the FB we are recommending is the 2011 has a coupon rate of about 10.9%, and we are recommending basically an accumulation or a buy at the 10.75 or 10.8% in terms of the yield. So it is a liquid paper. There's an outstanding amount of about 78.6 billion. Then those attractive levels are about 102.3 for every 100 in terms of the par value of the bond. The trade is inciting as the market away, the primary for this month. So that ends my presentation. I think Mathew can take over from there with the global segment. Thank you.
All right. Gerard, I want to share the screen. I'd like to share the screen. All right, hope you can all see my screen clearly. Thank you so much for being in this briefing. And now on the Forex section or the global market section, because all of us are not very conversant with this, and maybe for the ones who are very conversant, again, I'm just trying to cover out something small just to give you some more insights on at least an important topic in Forex trading. And then after that, I go to the week ahead. So today I want us to delve into psychology of trading. Remember, you are told to learn how to trade Forex, and then you learn the skills from your strategy. But maybe something that you need to think about very well again is your state of mind, your mindset. Because again, we say that even if you have the skills might be like might maybe contribute 15% of your trading, and then something like 25% comes from your money management, right, or risk management, and then the remaining like 65 to 70, that one will depend on your mental state or your psychology. So it's very important. That's why I want us to look at it today, because once you get hold of your trading psychology, of course, remember your mind drives everything, even in the work that you're doing, or even if you're investing in stocks outside there, your mind is very important. You need to be stable to avoid pitfalls that always entangle you and make you fail. So very important when you're trading in Forex, of course, make sure you avoid greed. This is where a trader just is yearning to get profits all along. And of course, you're anticipating now that you find you're getting an uptrend, you think that it will continue that way. No, it doesn't go that way. Forex market is cyclic, just the way we have cyclic economic patterns, and you should have a plan on where you're going to take your profits. And once your level is reached, just take them and get satisfied with that. Don't be greedy. Lock your profits in time before the trends change. In other cases, of course, we have traders who are who get the temptation to increase their positions just because you know you get a bigger profit when it moves in your favor, but they don't want to think about what if it moves against you. You make a bigger loss. So look at the position sizing and don't be greedy. Fear. Sometimes we have a trader making losses or make a huge loss or a series of losses over time, and now it becomes a challenge to them. You lack effective trading strategy, and therefore people don't want to put their money into risk. Okay, but the thing is, you need to not risk more than you can afford to lose. And for you to avoid fear, make sure that you have a trading strategy so that you have confidence in the way that you're placing your trades there, the way that you're managing your account. Representative bias, this is where now that you've been winning, for example, you get a trade which is winning and you've very well understood the setup the way it is, and then instead of approaching a new trade on its own merit, you want to like mirror what was happening on the other side or on that previous side on the current trade. That one is a mistake, so that you don't replicate the successful trades because you believe that it will be replicated to another one. Each trade is decided on its own merit based on the trading strategy and on the confirming aspects in the market. Again, there's euphoria. When you get profits, for example, and you've been making profits, you've been growing your account, there's that extreme excitement that someone tends to get. But to a professional trader, you should know that that one is a way to fail, because when you get so excited, then your mind loses the objectivity, right? So it's no wonder that traders who have got a lot of experience, they make their biggest loss after a series of winning trades in the market, because you get to develop that ego. You feel that you're so confident that now you cannot lose in the market. You can lose in the market anytime if you're not careful. So it's always good to wait for the market to present the right trade setups. Even if you're experienced, always have that ability to wait off or ward off that excitement which comes in. Negativity bias. This is where someone has been, maybe the strategy not working very well, you're losing, and instead of focusing on what is going wrong, this one especially is for the people who are starting up. Instead of focusing on what is wrong with your strategy or trying to learn from your mistake, you want to scrap everything now. Start looking for another strategy. Today you're using maybe crossovers. Tomorrow you're using supply and demand levels, and then you just scrap it, start at something else. That day is just like the way we see that a rolling stone never gather any moss, all right? Or whichever you want to put it. So word off the negativity bias, focus on your strategy, and make sure you're keeping it, improving it all the time. Check on the mistakes that you're making, could be the reason why you are not making the profits. Don't scrap everything out because they work, only that you've not gotten the right balance or the right time frame or the specific environment that it should be working, or even the specific financial instruments. Revenge trading, of course, most of the times you might not get profits most of the time. Sometimes you will get losses, all right? So and maybe even get losses 3 times or even 4 times. So the thing is, when you lose, you need to have that mindset that, well, this is business, I've made a loss, I have another opportunity. In forex trading, we say that you don't want to be that person who is going to be successful all of a sudden with just one trade. It's not a break it or make it just one trade, right? There are so many trades and future market opportunities that you can take advantage of. So don't do a revenge trading where you've lost, maybe you've lost like $50 or a percentage of your account, maybe 10%, and you want to get in again and even increase your lot size. Now the greed gets in, okay? You increase your lot size, you increase the position sizing because you want to recover that money after within a short time. Of course, that one is emotional trading, that one is revenge trading. You're trying to revenge against the market, and it's not something conscious. It's just the movement of prices influenced by general economic trends in the world, so in the world or global political or even social and economic things. So don't do revenge trading. If you lose, that one is a bygone. Go and learn from that, analyze the market again in afresh, and then place another trade. Maybe put things more tight, your risk management, yeah, and those kind of things, but don't do revenge trading. Status quo is where you've been having a strategy. For example, it's based on volumes, and you want to see when the volatility gets high, that's when you want to ride it, yeah, maybe those explosive moves. But then, or any other strategy which you have, remember, this is something which is changing all the time, right? The strategy which used to work on pound USD maybe some years back might not be working today, because right now the environment that maybe we had the US dollar trading or the pound trading at that time is different from now. Maybe during that time there was no political instability on Brexit or something like that, and today we have those issues about Brexit, right? Or during those years when you're trading, maybe before the elections, there was no big influence of the US dollar. So the way you're trading it at that time and the way you're trading it right now is a little bit different, and you might want to adapt to the changes, of course, to avoid surprises of losses. So be dynamic, keep on improving your trading strategy. As a trader, you want to, of course, give a lower loss, yeah, give a lower loss of a higher possible reward. You want to risk less and then get a higher reward. But in practice, we have traders who get into the habit of closing profitable trades prematurely and sometimes even holding for losing trades for long. That is wrong. You need to have a trading plan, and that risk reward ratio. How much are you risking, targeting what? And always make sure that you leave them to play out their way. Stop loss and take profit, they are there to be executed at the market price. All right, don't do it yourself. Just let them play their role. That's how you get to develop confidence with your trading strategy. Fear of missing out, and this is very important. A time like now we're hearing that drums beating here and there that, oh, we have opportunities in the market now that we have the volatility. Yes, of course we have it, and the US news, for example, are going to move the market very much We're going to look at it on the week ahead section, which is just in the next one slide. But the thing is, don't be influenced by the fear of missing out. That now the markets are moving very fast. You're not even planning to trade today, but then because you hear that the markets are moving very fast, now you want to go and place any trade to make something out of it. That will be a mistake, because even if there's that sudden volatility in the market and you've heard that it's going to move, but the thing is, were you prepared for it? So that these are the questions a professional trader would ask themselves. Is this trade identified based on my trading strategy? If it's not your trading strategy, if you can't see it on in the way you trade it, please consider refraining from that. Another thing is, if there are major news lined up relating to the instrument, are you aware of it? And is this something that you trade? If it's not something that you use to trading and it doesn't work your way all the times, please refrain. Then ask yourself, is your analysis based on the right time frame? Okay, if you find a signal, for example, to trade on the 4 hours, right? But you someone who always have been analyzing the market on the daily, maybe using daily and 30 minutes, and then you see a signal on the 4 hours. That may not be right based on your trading strategy, because there is what you're used to. And this one highlights the importance of discipline. Discipline is very important because, of course, in Forex trading, we're talking about a market where you will see changes within a short time. And then the last, or maybe towards the end, you ask yourself, what is the risk that you're taking? All right. Are you within the risk margin? What are you risking? For example, the distance between the take profit, or the stop loss and the entry, that is your risk. How much are you risking? And what is your target? So what is your risk margin and something like that? Then, of course, something else, consider whether you're in the right mindset. Sometimes you even listen to yourself. If you feel you're disturbed and you're not quite stable and you might not be objective, sometimes you can not even take that trade, right? Because again, it is said that even one of the best trades that you can make in the market, one of the best trades you can make in Forex market is not even trading at all, right? You're in the market, you don't see anything, your mind is clouded, you feel you're not really that objective, and now you want to you feel you're not at that right state of mind. Then the best way to do it is just refrain. You have an opportunity another day instead of entering and making a loss. So that's our bit on psychology of trading. Let's delve straight into the week ahead. And before that, just look at what was happening last week. Of course, US dollar is acting as the new gold. And what we mean by that is that people are trying to shelter themselves from the turbulence happening on the other currencies. So remember, US dollar is now behaving like a safe haven, and traders trying, or investors trying to hold their money in terms of US dollar. That's why we've seen it strengthening over the past few days. France, Germany, that is Europe in general. Now UK is in that bracket as well. The virus is really affecting those regions, and the European equities are of course tumbling now. As of last week, they were tumbling, and UK, of course, it's like they're now imposing new lockdowns. Right, just keep watching that space. Last week again, earnings results were there, and they continue this week again for some major and US stocks. Yeah, and again, the meltdown continues on the big tech and those big US stocks because of uncertainties, as people are trying maybe to book the profits, waiting for the uncertainty to wait off. Key events of the week today, something about the Canada, the PMIs on Canada, US, and UK, very important. These are some of the things which are going to drive to determine the move of the gold, very important. Australia, of course, the US election on Tuesday, right? That's when you're expecting to see who is going to back the 270 majority of the Electoral College, and we know the US decision. That's when it's going to affect the market again very well. So Tuesday is a day to watch again, and then employment of the labor market for the US, trade balance again there. So US, again, there are so many news, so many events coming up. Bank of England on Thursday, UK, they've got a major decision on the rate, the interest rate. That one is very important. And then on Thursday, again, that's when we have now the unemployment claims and the news from the Federal Open Market Committee. That's going to be about what the way forward on the policy, especially on the fiscal stimulus, still will have an effect on gold and the US financial instrument, the US denominated, the major currency pairs, just to be straight. Friday, of course, the non-farm payroll and all those things. Products to watch: pound USD, of course, because of the BOE rate, Bank of England rate decision. Remember, that one affects the strength of the currency of the pound, and that's what is going to cause a spike, yeah, within the short term. And then there's the looming fresh COVID-19 lockdowns. Probably might have been affected, but that one is still going to cause a lot of movements on the currency, and the likelihood of quantitative easing. Okay, as the Bank of England will be making that decision about the interest rate, then of course they will have to speak about their stimulus, of course, to try and raise up that, try to excite the economy, and based on that, it's likely to affect the interest rates. Again, might keep on going down. Remember that the UK is on very low, like negative interest rate, and that one is a space to watch very much. Currently, there is a lot of selling pressure on the pair, right? And it's trading below the moving averages, if you can see on the screen. And levels to watch, it's that 1.300. If it breaches that one on the upside, you might see it maybe testing the 1.30, and then maybe the highs of 1.317. Still something that we have to wait and see. And we have another level here, the support level 12860. That's where the bears have to maybe breach that level to again see a downward move below all the ways to 12700. But again, that's subject to the events which are coming up, and that's watch on that space. Something else, because of the US elections and that quarter earnings announcements, that's uncertainty about the stimulus. Of course, that one will be announced in the FOMC meeting, the 5th November, and the labor markets about the non-farm payrolls. Again, that one is going to affect the stock market. But for the stock market, that quarter earnings is very important here. Looking at the S&P 500, right, trading as US, it's supposed to be US 500 roll. Sorry about that, US 500 roll. It's trading below the moving averages, but the bulls might have to beat the levels of the 377 to see an upside, and maybe we have a support level at 3210. Again, below that level, we might see the bears taking down all the way to 3155. But those are the levels to watch as we go through this volatility period. Again, in addition to this, these are the companies to watch, and they are doing their Q3 earnings publications. Today, Clorox, PayPal, BMW. Tuesday, we have Alibaba and Commerce Bank. That is the expected days of publication. Wednesday, we have Uber, T-Mobile, Booking Holdings, Berkshire Hathaway on Thursday. Again, you might see whether you can tap onto those movements there. When the earnings are announced, of course, it indicates whether the company has been performing well, and it causes either a sell-off or a buying at that point. But maybe before the earnings and with the uncertainty, especially with the US stocks, you might see big moves as people are booking their profits before the uncertainty comes in, and you need to watch that space. On the side of currency pairs, the major currency pairs, the ones that are of course paired against the US dollar, might be showing a lot of volatility. Again, watch on that, but make sure we're not trading is something that you've been analyzing before. You've been trading with. Don't just trade with something that don't trade based on the fear of missing out. All right, US shares, global indices. Watch on the Dow Jones as well, trading as US30. Commodities like gold, very important. That one will be affected again by the news. So thank you so much. That one brings me to the end of my presentation. Over to my colleagues, Gerard and Gerard.
Thank you very much,
yes, Mathew.
Mathew.
Yep.
Yeah, thank you very much for this. So now we can proceed to the Q&A section. If you have questions or you would want to maybe get clarification, maybe you can use the Q&A section down there or the chat section. I have seen two of our participants who have raised their hands. I'll be giving you a chance to speak right after Gerald answers this question. Gerald, there's a question for you from Mil Kangari, who asks, what do you mean by top gainers or losers? They traded high and the others lost. That's a question. And then what is the difference between the highest traders? What is the difference with the highest traders? What do you mean by bullish? So I think these are terms that Gerald, maybe you can go through them and maybe explain to Milka.
Thank you, Daniel, and thank you, Milka. Maybe before I answer, I have to confess to Mathew about revenge trading. It's something that I experienced at almost similar period, 2016. We were just about the presidential election, and there was a shock win by the current president. And there was a lot of volatility then. The result was tragic.
Yeah, so we need to watch about that. Maybe the best way to do it is if you've been holding positions for long and you're fearing that one, maybe think of hedging, right? Because if you don't want to get out of that trade, that position, you don't want to risk again hedge and something like that. So proceed, Gerard.
Yeah. So back to the question. Yeah, top gainers are basically the stocks whose prices rose the most during the week. So if, for example, if you say price rose from 50 to 100, that is about 100% gain. So that is a top gainer. And then we tend to look at the top 5 that have gained the most during that week. Top losers is basically the opposite. So the stocks that lost the most during the week, that is week on week, Friday of last week and Friday of the prior week. The difference with the highest traded or the top traded is the top traded stocks are the stocks that had the most volumes traded. So basically the number of shares that were traded during that week. So we'll tend to find that the most traded stocks during the week are usually Safaricom, KCB, Equity Bank, EABL, and some other top stocks in terms of market capitalization. So that is the difference. The other bit is about what I mean by bullish. I think Mathew has also mentioned about bullish. So bullish is I'm trying to find the easiest way to put it. Bullish is basically a market sentiment where prices or where the sentiment is positive. So basically, guys are buying into a certain securities, in this case, the equities, or even for the currency pair, guys are buying into the pair. So that is a sentiment that generally characterizes positive, guys have positiveness in terms of how the stock price is expected to perform. And then on the opposite side, we have bearish sentiment. So bearish sentiment is basically a sentiment where most people are not positive, and they are selling out of the market. So the two descriptions come from market analogies. So bullish comes from the word bull, and bearish comes from the word bear. So why bull and bear? Why these animals? So the two animals they are described based on how they do their attack, right? So for a bull, it pounces you upwards when it attacks you, but for the bear, it pounces by scratching downwards. So that's why a downward market is called a bear market, and a market that is trending up is called a bull market. So that is the difference between between the two. So for equities market, we have basically been seeing a lot of bearish sentiment over the recent this year. Basically, it has basically been bearish across the board for most of the stocks. Thank you. Back to Daniel.
Yes, thank you very much, Gerald. I'll now allow Masharia to ask his question live. Masharia, you are permitted to speak. Kindly ask your question. Okay, Wallace, yes.
Yes, good morning.
Good morning.
Yeah, my name is Wallace. Yeah, I would appreciate the psychology of trading. It was very exciting. Yeah, it's only that I feel like it was a bit rushed. At least I've traded a bit personally in the stock exchange, and
Yes.
I am a witness that those things do happen. Yeah, and I feel that if that psychology of trading was given a little more time to be more elaborate, I found it very exciting, and I say it is so real. I appreciate.
Okay.
All right,
Thank you.
Wallace, thank you for that. Maybe we can, because again, because of interest of time, we have to pass through it very fast. And maybe what I would say, Wallace, you would get it very well if you can just register to our webinars when you're doing the psychology of trading. That's when you'll have enough time to really speak about it. But again, I can maybe, because this one will be shared to you, the recording will be shared to you towards the end. It has always been happening. That way you can have a time to look at it. And anytime, feel free to engage with us and we can speak more about it. Thank you so much. And I'm happy to get that feedback.
Okay, thank you very much, Matthew. Gerald, there's another question from you from Steve, to you from Steve, which says, is this the best time to buy a bank share?
Yes, good question, Steve. I think, yes, if you're a long-term investor, but in the next couple of weeks, I would recommend you to look out for the market reaction in terms of the expectations of the results the banks will be announcing. Because as I mentioned initially in the presentation, is that we are seeing a pattern that is repeating itself to what we saw in half-year results. Just when the banks were about to announce their earnings, their half-year earnings, we saw a lot of selling pressure, and most of the banks came to their 52-week low. And we are seeing such a pattern again. I think for the two banks, for example, Equity and KCB, they are now below about 35 level, a key level for them. So for these few weeks, as they announce their results, I think there's going to be slightly better prices compared to where we currently are at for the banks. But if you are a long-term investor, then I think for most of the banks, they have huge value and huge potential for upside, especially when we are over with this pandemic. Thank you. Back to Daniel.
Okay. Amos is asking, what is the projected market reaction to a disputed US election? Over to you, Matthew.
Okay, Amos, I didn't get the question for Amos.
What is the expected projected market reaction to a disputed US election?
All right, if the election is disputed, then it's going to bring even more uncertainty, because now people are going to play safe, of course, waiting to see who will be taking it out. Because again, remember, the market is going to take direction based on who takes that leadership. Because again, we have Joe has his policies that he would push, right? And US, of course, and Trump has got the policy that he will push. So in the event that we have uncertain, we have a conflict, because of course the way they've been talking about the sending of the ballots and the way there are those kind of things. In case we have a disputed election, then of course we might see a little bit more of maybe sell-off in the stocks, and maybe again people going to the safe haven again, maybe going to the gold. and those kind of things, maybe having the US dollar weakening, but those are things that we might have to wait for, right? But again, it will just increase the level of uncertainty, but maybe the bigger news to wait for. So of course, we trust that the US is a really a stable political, democracy, and might not, even if that one might come up or rumors on those things might come up, it may not really play out for a long time. But it's still a space that we have to watch and see how it goes.
Yeah, thank you very much, Mathew. Ian Wangai is asking Gerald, what is your view on Centum? Probability of it moving lower? And then as Gerald will be answering that, and Ndenga Kegode asks, what would be the expected reaction in the event of an unlikely Trump victory? That is to Mathew. Gerald, let's start with Gerald.
Thank you. Good question. So I think there was a certain level that most investors were not counting on Centum going below. I think it was Kenya shillings 20 level, but recently the market price has gone much lower than that. Whether that is a a bottom, I wouldn't say for sure, but I think there's a lot in terms of what is happening and expectations of investors and the environment currently, how it's going to affect, especially the real estate sector. I think when you look at Centum recently, they are keen on the real estate segment of the business, so they have diversified. They are more of a development company than where they were previously, and there's that sentiment about how the current pandemic is expected to affect the real estate estate sector generally. So I think the market keeps on giving us surprises, especially in the current environment. When you look at even the price multiples of Centum, I think it's about 0.3 times book value, quite discounted compared to even to historical averages and where you'd consider an ideal book value, price to book value ratio. So I think it is discounted, yes, but there's that sentiment about the performance and what they are doing in terms of the real estate portfolio that they currently have. Thank you. Back to Mathew. Yes.
Mathew? We cannot hear you.
Sorry about that. I also respond about the likely effect of a win by Biden, right?
Yes. No, a win by Trump.
A win by Trump.
Yeah.
So we have a couple of scenarios that we might consider. If Trump wins the second term, it would likely be met with a strong rally in stocks because in line with what happened in 2016, of course, with increased optimism in the market about the tax cutting policies. So Trump, of course, wants to has a desire to weaken the dollar and make gold even more attractive, and that one would make even hit high record lows. So again, victory of Trump, again, we might be positive on the gold, right? And again, with Trump victory, it might harm the emerging economies because of course, Trump has been wanting is someone who has been advocating for the strengthening of the US market, and maybe you've been seeing him cutting ties with some countries, and that one has been hurting the way those other emerging markets are working. We can see the tariffs that have been put in place, and that one is going to be seen as a continuation with the victory of Trump, and the emerging markets are likely to struggle because of course investors would want to, of course, cover their risk holding on US dollar and could resort in stronger selling pressure on those currencies. Of course, again, as the polls come in favor of now there is a mix up a little bit. So currently still waiting to see what might play out.
Okay, thank you very much. Gerald, over to you. 2 questions. Wallace Muru asks, what can you say about Bamburi? And Titus Parsitau is asking, is it advisable to buy only banking stocks at the moment?
Thank you. For Bamburi, I think the stock is quite solid in terms of their fundamentals. I think even under recent pressures in the recent years in terms of pressures in the in cement and the real estate sector, they have basically tried to maintain and their assets, the quality of their assets, not much borrowing that I've seen. But again, they have been impacted by some of some cost pressures, and also on the revenue side, I think the growth has been very marginal. Cost pressures, mostly power, has been a challenge, and this is not something that is unique to them. Economy, of course, has been on a slowdown even before the pandemic, and then this also has been a challenge for them. So in terms of the business itself, I think it is solid. But in terms of growth, I think as much as they have been, coming up with products, I think they are not. They are not as aggressive, for example, as I have seen other companies, especially the private cement companies like Simba Cement, that has been very aggressive in terms of expansion, in terms of the product lines, clinker and the like. So it seems in the growth area they're a bit slow as much as the business is solid. So I'll be watching out in terms of how they are going to to defend their market share, to maintain their market share, given that they are like the largest cement manufacturer. So it is keen for me how they are going to address market share erosion in the in the subsequent years. I've seen the recent data talking about cement consumption at very high levels. Previously, they were relying on a lot on cement consumption by the SGR, but that came to conclusion at Russia. So it is now key to see how they are going to play out with the other market players in the market generally. So for the other stocks, I think question was about banking. Yeah, banking stocks are quite good. They're quite good because most people are expecting the impact of the pandemic and provisions and all these other things to be very large for the banks. For some of the banks, it is. I think for banks like Equity and KCB, they took quite some huge provisions during half year, and this generally affects. Sorry. So this generally, affects how investors perceive these stocks in the market. So banking stocks have come off. I think it represents an opportunity because they will rebound, especially the big. They'll come out of this pandemic, and continue with the growth story that they had, which was quite convincing. The other stocks, I think EABL also recently at a price of about 150, 153 levels. Very good levels again. Short term, there's that impact of, in fact, there's a threat now about closure of bars and other restrictions that, given the spike in the pandemic. So there's that threat, but in the long term, the business is still solid. So because the market, there are opportunities, not just the banking sector stocks. I think except Safaricom, which has been very stable this year, I think most of the other good stocks are quite discounted compared to where they have been historically. Back to Daniel.
Okay, well, I think one last question. Do you see KQ getting back?
Getting back to the market or profitability?
I think maybe, Beatrice, I think she meant getting back to the NSE.
Well, that is very speculative. I think there are hurdles currently in terms of approvals for the takeover, but I think the government is very serious in terms of taking KQ back to be a parastatal. I think, given the recent years, the challenges they have been having, I think government is now very keen to support them. And I don't think they can continue supporting them as as an entity, a private entity in the market. So I think that plan is still on course. I don't think they'll revert back to market. Currently, what investors are waiting is communication in terms of what is the way forward, what is the price that the government is coming to give investors. They have said it's at a premium to market price, so I think there's going to be a good gain for investors when the transaction is finally announced and executed.
Okay, one question to Mathew. Ziki is asking, where do we sign up for the psychology of trading webinars?
Good question, Ziki, and thank you for the interest. So we have the psychology of trading, and currently we're trying to change a little bit to make even the training more effective. And once we slot it in, we will communicate to you, but it's already there. It's something that we offer. It's just a matter of slotting it in and communicating it to you. So if you are on our platforms and you're already in touch with an account manager, it's an information that you will really get in handy.
Okay, thank you very much, Mathew. There being no other question, I'd like maybe to first of all, thank you, Mathew, for joining us this week again. Thank you, Gerald, for always being there. And for our attendees, we'd like to thank you very much and ask that you may have a successful week, investing week, and be on the lookout for the US elections and its impacts, and then make wise trading decisions. Thank you very much, and see you again next week.
All right, thank you. Bye.
Bye-bye.